Hello and welcome to our latest Insider interview. Today I have with me Abi Glennie, Fund Manager of the Aberdeen UK Smaller Companies Growth Investment Trust. Abi, thanks for coming in today.
Hi, thanks for having me.
Year to date in 2022, it's been a very tough period to be a UK smaller company investor. What are your thoughts on the sell-off? Do you think it's been overdone?
We actually don't really think the sell-off's overdone if we look at some of the historic sell-offs we've seen in markets, over a long-term period. And I think that we've seen definitely a risk-off trade, which obviously hits small and mid-cap more typically than large cap. And I think particularly in the UK, actually, we've seen some of the sectors which dominate in the UK large cap space, such as resources, which have been doing particularly well for various macro reasons, has actually made that disparity even broader. Why we sort of don't think that the sell-off's been overdone to date is we've seen larger sell-offs than this historically, and also we do think that we're just still in the early stages of recession, and typically what we would see is markets don't start to recover until you get to the worst point of pain, and the macro environment seems to suggest that we're probably still a little way off that. We do have optimism about recovery overall and certain style aspects starting to rotate again, but overall the market doesn't feel like it's about to go on a big recovery mode to us.
The market rotation to value shares has also been a headwind for your strategy, given you focus on growth, quality and momentum. If that market rotation continues, how much of a headwind will it be for the trust?
Yeah, so that's definitely been true. This year, particularly in the early stages of the year, actually value is very much the dominant drivers of the market, and quality and growth feels out of favour. Now, for us, if we look over the long term, we do believe that quality growth will continue to perform well. Typically, periods of value outperformance aren't long-lived. And also when we look at some of the valuations actually that we're seeing for quality growth businesses now, we think that they actually offer really good value and almost sit in actually some of the value buckets that people would make looking at sort of PE multiples. Some of that as well we've seen from some of the sectors which are doing well happen to sit in those value spaces as well. So we always think it's difficult as well comparing like for likes in different periods. Now, absolutely, if we continue to see value in vogue, that does become more difficult for us. But what we've seen signs of, and I think what's been difficult about this year is we've seen maybe a month where we've seen something change in the market, but actually we haven't seen those trends sustain yet. We believe though that as we go into a recession and slower economic growth, that actually quality becomes increasingly important. And that's what we haven't seen quite in the market yet. And if I'm honest, I think we would have expected to have seen that by now. And that's because companies, investors really start to look for companies that, for instance, have balance sheet strength, have resilient revenue streams, have recurring revenue, all these aspects which make their survivability and actually ability to thrive better. And also when growth becomes scarcer, I think if we can still identify companies who are delivering consistent earnings growth in that environment, that also becomes more valuable. So actually, in a typical recession, on a relative basis, we tend to do quite well because of that quality focus, but we are still to see that environment, we think, emerge this year.
And given the sell-off that's taken place in markets this year, have you been using the volatility as an opportunity to pick up some potential bargains?
Yeah, so I think if we look across the trust, we probably have a slightly lower number of holdings actually at the moment. And we've had a couple of new holdings we've added in, but actually I would say more of the activity and the trading has been on top-ups and reducing positions. Now, I think overall turnover actually is probably very much in line with the long-term average. But I think where we've been taking opportunities is in somewhat of it is driven by what we've seen with share price moves in terms of just portfolio construction. And also, part of our process is always looking at, we want to be adding to companies and investment cases which are improving and reducing, where we're seeing distractions as such. And we use the matrix, our stock screening tool, to help with that. So, a good example, for instance, retail's obviously been a tougher environment. So that's something that for a number of months we've been continuing to reduce.
Could you give a couple of stock examples of companies that you've been adding to this year?
Yeah, sure. So a couple of things that we've been topping up a lot, I would say, would be companies like 4imprint, which is a heavily US focused business which does promotional product material. So this really has been recovering out of COVID. But actually this has the potential to be a really good dividend yielder. It's trading incredibly well. And importantly, they're seeing a really high return on the increased marketing spend that they're making. So we've been topping up that. We've been topping up companies like Marlowe, which is sort of business services, very critical in nature, very recurring. And also things like Alpha Financial Markets Consultants. So this is a business which does consultancy for the asset management business and increasingly as well life insurance. And it's trading really well across the UK and actually has expanded into the US. So that's sort of a growth into an adjacency that's helping the overall investment case. And with them, we see things like actually any disruption in market, any regulation, any consolidation in the industry tends to be a positive for them. And that's what they continue to see.
And to fund those additions, has gearing levels been increased in the trust? And if not, what would it take for gearing levels to go up?
Yeah, so typically we have gearing as really more of a structural aspect. So the gearing hasn't really changed a lot. I think we definitely have the flex if we wanted to increase gearing. We typically aren't big market timers, and we always want shareholders to take more of a long-term strategic view in terms of having some of their asset allocation into smaller companies. I think if we had a really bullish view on a market recovery, and then we do have the optionality to use gearing a bit more.
Inflation is a big concern at the moment. Have you been adding inflation protection to the portfolio, such as focusing more on pricing power among the companies that you hold?
Yeah, so I think actually inflation is a good example of how we think about, macro things that we're seeing, which is, we very much take those on a stock specific level. So we're thinking about for each stock specific investment case, what is their inflationary pressures and what can they do to offset that? And typically, having pricing power actually in any environment is something we look for in our businesses. So we're definitely seeing, I'm not saying it's not a headwind and an issue for businesses, but we do think we have quite a lot of holdings where they have the ability to pass that on and protect margins. And maybe some examples would be things like so Watches of Switzerland, actually they really are a beneficiary of inflation. So where they're seeing Rolex have now, having not actually increased prices for many years, have put through a pricing rise earlier this year and then another one this week, another 5%. And actually that is a benefit to Watches of Switzerland. I mentioned Marlowe before. I think that the business critical nature of their type of services really helps them in terms of passing on those inflationary pressures. We've also got things like Global Data in the tech space. So very much these are recurring revenue streams. We don't really see customers cancel even on a slightly tougher environment. And actually the inflationary pressure, they've already been going through a sort of pricing mix because of the history of the business. So I think actually they also have the opportunity that, it's done within that, but because they can offer lots of additional services, inflationary pressures can almost be bundled up in terms of offering more as well with given price rises.
You touched on it earlier, it's likely that the UK is going to enter a recession before the end of the year. How much of an influence does something like a recession have on your stock picking?
Yeah, so I think, key for us is that we stick to the same investment process. And, we've run that for so many years now. We think this is the sort of fifth economic cycle that we're seeing. So we absolutely will not veer away from that. But recession does have an impact. And I think that's the way that I was saying that we take all those macro views and we look at them on a company specific bottom up level. So, for every company, we're thinking about things like, inflationary pressures, interest rate pressures, what's a positive, what's a negative. So I think you can absolutely see shifts. I think we've definitely been moving, as I said, away from, for instance, consumer exposure generally. And, I think we've been adding to things where we really believe in the quality aspects of the business and the recurring and visible nature of the sort of revenue streams. And also where they have that pricing power that they're able to protect margins. We really want to focus on businesses where we're getting earnings growth and dividend growth.
And finally, do you personally invest in the trust?
Yeah, absolutely. So, a big part of my personal savings are actually in all sorts of funds run by our team. So our UK small cap trusts, our mid cap funds, and actually our European and global funds as well within the team.
Abby, thank you for your time today.
Thanks very much.
That's all we have time for today. You can check out the rest of our insider interviews on our YouTube channel, where you can like and subscribe. See you next time.